Nvidia just shook the investment world with this bombshell announcement of a 10-to-1 stock split. Now, this colossal move has the potential to reshape the playing field for investors everywhere. Now, before we get into any details, as of June 2nd, Nvidia's stock price stood at $1,095 per share. So if you possess one share and the price stays the same, on June 10th, you would have 10 shares at a total value of $109.50 per share. So yeah, there's basically no change. Well, except for the possibility of a Tesla level hyper rally in price, or the exact opposite could happen as well. But let's go into 3 reasons why companies do stock splits. Let's go. One primary reason for a stock split is to reduce the price share. High share prices can actually defer some investors, especially smaller investors or investors that prefer to buy in round lots or multiples of 100. By splitting the stock price, the company can make its shares more accessible to a wider range of investors. Another reason would be to increase the liquidity in the company's shares. A lower share price may actually attract more trading activity, as smaller investors and traders find it easier to buy and sell shares at a lower price point. This increased liquidity can actually help reduce volatility and stabilize the stock price. The third reason would actually be to improve psychological perception. Stock splits can sometimes be viewed positively by investors as a sign of confidence from the company's management. A split can actually create a perception of growth and prosperity, as companies often split their stocks when they believe that their stock price has become too high relative to other companies. This can lead to an increased investor confidence and potentially attract more investors. Now let's go over to a couple successful stock split examples. One of the most famous examples is actually Apple. Since going public in 1980, Apple has undergone multiple stock splits. Some of the most notable ones include a 2-for-1 split in 1987, 2-for-1 in 2000, a 7-for-1 in 2014, and a 4-for-1 in 2020. That means if you held on to one share from 1980, you would have 112 shares today. Now, Google has seen multiple stock splits since its IPO in 2004 as well. If you hold on to one share from that date, you would have 40 today. And Amazon has both Apple and Google beat. It split its stock 4 times since 1997. If you held on to just one stock since its initial offering, you would have 240 shares. Nvidia's 10-for-1 stock split marks a significant event in its corporate trajectory. This has the possibility to enhance investor accessibility and interest. While the split itself doesn't alter the company's market value, it could foster positive outcomes in terms of liquidity and investor participation. As for myself, I don't know whether or not I'll be getting into Nvidia anytime soon, but let me know down in the comments what your thoughts are about this split. I hope you enjoyed the video, thank you for stopping by, and I hope to see you in the next one.